Joining us now is Brian Gendreau. He's a finance professor at the University of Florida, also a market strategist for Financial Network Investment Corporation, which is an advisory firm, with more than $39 billion in assets. Welcome, Professor Gendreau. Thanks so much for joining us. Now, recently, you analyzed the Dow's performance around midterm elections and found that the Dow has posted a median gain of 8.5% in the 90 trading days following the elections in 19 out of the past 22 midterm elections. Now, how do you know that this is not just a seasonal effect?
Well, that's the big concern. That's the big question my colleagues had is, isn't this happening in a period in which stocks tend to go up anyhow, the so-called Halloween effect? But it turns out on non-election years in the 90 trading days following what would have been the midterm elections, stocks only went up by an average of 3.6%. So the gains in midterm election years have been almost twice as big as the gains in non-election years.
So let's take a quick look. We have a chart here actually illustrating the point that you made. And we have the Dow's performance 90 days before the midterms, and we have the 90 days afterwards. I think we're going to pull the chart up in just a moment. And we just took two periods here. You looked at the period from 1942 to 1958, as well as 1994 to 2006. Explain a little bit of the period before the election.
Yeah, before the election, stock markets tend to basically be flat to down until about 30 days before the election, and then they tend to go up. And we've seen that in this market. The Dow went up over 11% since the beginning of August and kept going up in October. That raises the question, maybe some of this post-election bounce has been moved forward because of the effect of the internet and the increased availability of information. But we'll see. We've got a lot of time after the election.
We were taking a look at these two charts, one chart actually where you looked at two different periods, at 90 days prior to midterm elections and 90 days after the midterm elections. And we were talking about some of the activity right before a midterm election, and we see that over time, it looks as if just most recently, there's usually a sharp upward rally going into the midterms. Now, we have been on a tear really since August as far as stocks are concerned. But let's specifically talk about what everyone's talking about today is what party takes control and how will that actually impact the Dow, or how has it in the past?
Well, almost always the opposition party gains seats in the Congress. Since 1942, the opposition party has gained 28 seats in the House on average and about 4 in the Senate. Which House gains, or which party gains and which party loses, doesn't really seem to matter to the outcome. The market tends to go up following the elections and a little before the elections when Republicans pick up seat and when Democrats are present, and vice versa. What seems to matter more than anything else is just that the election is over and some uncertainty is out of the picture.
Now, what about this midterm election is different, and what about the state of our economy is different than what you looked at in the past? I mean, one thing you mentioned that might explain that sharp upward rally prior to the midterm election in recent periods of time is the way that we disseminate information is much more freely available on the internet as well as 24-hour television. So what else may impact the results going forward?
Well, there are a lot of things. First, going back since August, part of what's going on has been the double-dip recession has been priced out of the markets. The economic news coming in since the beginning of August has been mixed, but on balance maybe a little positive, certainly not consistent with another recession. Going forward, tomorrow, it's going to be a little hard to tell because you got two pieces of information. You got the election results, and then you have the Fed's announcement about the extent to which they're going to engage in quantitative easing. Going forward, it turns out historically, the state of the economy hasn't mattered very much, whether we're in a high inflation period or low inflation period, in a recession or not. They really haven't affected the post-election results.
All right, Professor Gendreau, thank you so much for sharing this historical perspective with us. I guess in 90 days we can touch base, but thank you so much for joining us, Professor, from the University of Florida. That was Brian Gendreau.